What's going on, guys? Let's take a technical analysis look at Apple. We're going to be going over the daily time frame. Now, today we pretty much finished flat on today's session. If you are trading options and you're looking for a stock that is going to be beneficial to your account size because maybe it's a smaller account, I think Apple, AMD are perfect stocks that you can start off with. The only reason being is because they're going to follow the NASDAQ 100. They're going to have tremendous intraday kind of moves, right? But they're not going to give you that risk of, let's say, Nvidia or something like Tesla. You can manage your risk a little bit better, right? So if you're new to trading options or you're new to day trading, I definitely would not trade stocks like Tesla or Nvidia, just due to the fact that that's how accounts get hurt. That's how accounts die. Right now, you may follow people on social media who trade these particular tickers and you see them making, insane gains, right? You have to take one thing into account. You don't know how long this person or trader has been trading. You don't know if they trade it on a day in, day out basis. Like, for example, I'm going to trade Tesla and Nvidia probably 6, 7, 8, 9 times a week. So my comfort level with the way that these stocks move is going to be a lot less drastic than, say, someone who gets into Tesla calls day one, right? So let's look at Apple. Apple finished at $165.63. It's been on a fantastic run, realistically, ever since reclaiming the 20-day moving average going back to March the 13th. If we kind of look at what we did here, we got above all of this supply here. We consolidated sideways for around 2 days, and then we had a nice breakout candle to the upper Bollinger Band, which kind of tested the channel of March 6th. Now, if you're following along, you don't understand a lot of this lingo. I do offer 2 video courses kind of outlining my strategy and how I use supply and demand to kind of benefit myself and my trades and my capital to be profitable and more consistent on a day in and day out basis. Now, again, every strategy out there is a winner. Every strategy will win. You can close your eyes, click buy, click sell, and you're going to win 50% of the time, 40% of the time, right? That's not the hard part. The hard part is managing the emotions. The hard part is knowing how much size to put on. The hard part is knowing and understanding when to get out of a trade. That's the hard part. That's what you need a mentor for, a coach for, a community for. A trading book, a trading group, some friends. You need someone to kind of hold you accountable because, trading, when you're sitting by yourself and you're watching the price action go up and down, up and down, up and down, it's very easy to say when you're down in a position, it's going to come back. Let me just hold this, right? It's when you do that time and time again is when your account really gets hurt. But just getting back to the stock here, once Apple really got above this linear regression channel supply here, right here on this day here, if you want to pull it up on your charts on the daily time frame, this is March the 21st. Once we got above this here, we kind of traded sideways 1, 2, 3, 4, 5 days, kind of hovering. This is what you would call a period of distribution here. This is a new high. This is back testing the breakout. This is building up and consolidating the price action for the next kind of run and next leg and the next kind of new high. Now 1, 2, 3, 4, 5 days we've been on a consecutive run here to the north on Apple, and if we kind of look at today's close here, we closed back inside of Friday's range with potential to kind of come back and test 164. Now, if you're looking to kind of trade Apple, I would hang tight and allow trades to develop. A lot of times newer traders, they want to be trading every single minute of the day, every single day. It doesn't work that way. You're going to make more money kind of picking your spots. Even if you are a day trader, that doesn't mean you're putting on 100 trades in a day. Now, are there some firms or some quant traders who put on hundreds and hundreds of trades a day? Sure. But as a normal retail trader like yourself and myself, we can't do that, right? Spreads are not going to be tight enough. More than likely, we're not going to have the account size that's going to allow us to do that. And it's just overall mentally exhausting and mentally stressful. What you want to do is take trades that have good measured potential, meaning when you take the trade, the odds and probability of it going up $1, $2, $3, $4 is in your favor versus trying to scalp for 20 cents here, 30 cents there, especially if you're trading options. If you're trading equities, it could be a little bit different depending on your account size. Again, keep in mind, if you are trading equities and let's say you're trading one lot on something like Apple and it goes up 20 cents, you're only making about $20. So just have a realistic expectation as to how much you are going to make once you actually do get in those trades. So what I'm looking at here on Apple is I would like to see a backtest into 164, and to be quite honest, I would like to let this go for 2 or 3 days and get a backtest into 162.20. That's the 10-day moving average. That would be a much more firmer area of support here that I would like to see Apple pull back into, because if it pulls back into the 10-day moving average, which is 161, well, then when we had all of this consolidation on this original breakout here on the 21st of March, 1, 2, 3, 4, 5, 6 days, that would be taking us into that range to see if this new former resistance is going to act as new support. Now, anytime we get a breakout, we always want to see a back test to see if the bulls are strong, to see if there's buyers that are going to step in. And if buyers start to step in around, again, remember, all levels, all indicators are zones, right? You can't necessarily play them to the penny. Sometimes you're going to overshoot them. Sometimes they're never going to make it. So let's just make this very, very simple. Let's call it in between a price of 160 and around 161.50 is the potential bounce spot on Apple. We're going to want to let it come into this area. We're going to want to see the bulls defend, and we're going to want to see them step in, and then we're going to want to see the next day's price action take out the prior day's high. If we can do that, that's our indicator to kind of get long, and then what we're going to do is use that day, that low as our stop, right? So for example, let's say for example in the next 2 to 3 days Apple comes down and puts in a low of around 160.25. What we are going to do is mark out 160.25. That's going to be our stop loss as soon as the price action gets back above that day's high. Let's call it 161.89. As soon as we get over that, we're then going to get long. We're going to take profits into the next supply zone, which would be 164. We're going to hold the runner to potentially test the highs here. And if we do kind of retrace back through that that initial area when we broke below that 10-day moving average or touched the 10-day moving average, that's going to be our stop. So again, if you're looking to trade and you want to be a day trader, the first things first is you need to be realistic. You need to be realistic on how much money you're going to make based on your account size and based on how much position sizing you're taking. So if you're playing options and you're playing, let's say 1 to 2 contracts on a stock like Apple, then maybe $20 to $60 is a great place to start taking profits. And it's not really necessarily about the dollar amount, about it only being $20 or $30, but it's about getting comfortable with the stock. It's about getting comfortable with your strategy. It's about getting comfortable with your risk management. And the more times you can take money and take money and take money, the overall and more successful you're going to be in the long term. So many times traders want to come into the market. They want to hit it big on one particular trade. I've seen traders and talk to traders personally who, are upset that they were up maybe $50 and now they're down $150, and they're wondering, well, how come I'm not making $300, $400, $500 in a day? How come I'm not making $1,000 in a day? And when I ask them, well, how much size did you have? And they tell me 1, 2 contracts. And to be realistically, in order for you to hit, $500 on one Apple contract or $1,000 on one Apple contract, it's tough, right? That's going to be a play that you're going to need to hold for multiple days and probably more than likely not be playing weekly expirations, meaning giving yourself more time, maybe 2, 3, 4 weeks, and you're playing for a potential macro breakout or breakdown where potentially it's going to be turn into a swing trade from the day trade, and essentially you're going to be able to hold that kind of runner and allow it to kind of continue to work for you. But if you're talking about from a pure day trading perspective here, and you're playing one contract on Apple, $25, $35, $45, $65, $100 is fantastic areas and zones to kind of take that profit call it a day, come back, see the new setup, get into the trade once again, and replicate and duplicate that process over and over and over again. I hope this video helps you guys. Again, we don't really have a continuation of the breakout until we get over 167. We do have support at 164. My perfect bounce spot that I would like to try to tag would be anywhere between 160 and 161.50. That's going to be the first zone I'm going to go ahead and try to bounce on Apple. Now, again, if we do close below 161.28, I will look for the short position. Again, remember, if I'm going to try to bounce this, I'm going to need to test this area, either break it and reclaim it on the same day, and then that's what I'm going to get into it, and I'm going to use the low as my stop, or this is going to close below the 10-day moving average, and then I will be looking for the short position back into the rising 20-day moving average sitting at around 157.50. I hope this video helps you guys. If you guys are interested in learning how I trade or want to get access to the strategies and trade with myself and the team on Discord, make sure to visit evolutiontraders.com. You're going to see multiple checkouts for becoming a lifetime member. You're going to get all access to everything, and I'll see you guys all in the next video.